Hi, my name's Craig Vaughan from Map Home Loans. This is a short 10 to 12 minute presentation on getting a home loan approved whilst on a temporary or non-resident visa. Quickly about Map Home Loans, we're experts in helping clients with home loan approval to purchase property in Australia with or without a 20% deposit. What we're going to talk about today is the 4 eligibility criteria the banks look at when deciding whether or not to approve your home loan, how to get a temporary resident visa home loan approved with or without a 20% deposit, briefly on the process of buying property in Australia. We're also going to look at some misconceptions busted, so some things you may have heard that may not be true, and we're also going to finish off on what your next steps are before going out and making offers and buying property. Firstly, cover off on what a non-resident is. A non-resident for lending purposes is someone who does not hold Australian citizenship or permanent residency or resides outside of Australia. So for example, someone, an Australian expat, Australian citizen living abroad would be also defined as a non-resident. Just quickly on this video, I've actually done a number of videos and they're all on the website under the relevant pages and on YouTube. There's a specific video for 457 visa holders as the criteria is different for them. 461 New Zealand family relationship visa holders, there's a video for that. Spouse visa and partner visa home loans for visa holders subclass 309, 820 or the marriage visa 300. There's a video on that one. Those all have different policy, and in all those cases you can get up to 95 or 90%. There's also a video presentation on Australian expats, Australian citizens living abroad as well. The general guide though for getting approved on a visa is you have to fit 4 criteria. Firstly, you've got to have sufficient income. Secondly, you've got to have time left remaining on your visa. Thirdly, you've got to have clean credit. And finally, you've got to satisfy the bank's deposit or genuine savings requirements. If we go through each one of those slide by slide, firstly, the income. Obviously, it stands to reason that you need to have sufficient income to afford your repayments whilst also paying for your existing commitments such as credit cards, personal loans, dependents and things like that. Secondly, some lenders will require that you do have minimum 1 year left remaining on your visa. Policy does vary on this, and there are always exceptions and always options if you don't have 1 year left on your visa. But as a rough guide, most lenders will stipulate 1 year left remaining on your visa. You need to have clean credit in Australia that is free from bankruptcies or defaults. Not typically an issue for our clients, given that it's quite difficult to get finance when you're on a visa anyway. However, it does happen occasionally with an unpaid telephone bill or something like that. And finally, deposit and genuine savings requirements, and we'll have a closer look at that now. With deposit, a common question is how much do you need? You need enough to fund your deposit. That's that grid point 1 there, client equity or deposit. You need enough for stamp duty. You may also need to pay lender's mortgage insurance depending on whether you're borrowing more or less than 80%, and you also need enough for all your extra costs like solicitors and building and pest inspections and things like that. So looking at each one of those in turn. Client equity or deposit. Look, the general rule for temporary and non-residents is you do need a 20% deposit. There are many banks who won't lend to you at all because of your visa. The ones that do will typically require a 20% deposit. We do have arrangements where we can get up to even 95%, i.e. with a 5% deposit, and the exceptions are listed there. And there's a video on each one of those. So for example, if you're on a 457, 475, 487 or 495 visa, go and see the video titled Can I Get a Home Loan on a 457 visa? If you're purchasing with an Australian citizen or permanent resident, you can borrow up to 95% in that scenario, and refer to the video on buying a property with your spouse or partner. And if you're an Australian citizen living and working abroad, you can also get up to 95%, generally 90%, but there are options to 95% as well. And again, go and check out that video, Can I Get a Home Loan as an Australian expat? We've also developed a quick calculator. We can go on to that link there, the non-resident calculator. You can punch in a few details on your visa, currency earned and things like that, and it will give you some feedback on whether you might qualify for greater than 80%. For the purposes of this video, given that we have a separate video for all the exceptions, we're presuming for this video we're looking at 80% LVR whilst on your visa. So if we look at an example of a $500,000 purchase in New South Wales, if the LVR maximum for you is 80%, the bank's going to lend you 80% of $500,000, which in this case would be $400,000. So the bank will lend you $400,000. You need to tip in the difference, or $100,000, and that is your client equity. That's your deposit. On top of your deposit, you need to have sufficient funds for stamp duty. We've got a calculator on our website there, and you can punch in how much your purchase price is, select the state, and it will tell you how much your stamp duty and government fees are. For this particular purchase, $500,000 in New South Wales, government fees in total are $18,296. Finally, presuming we don't have lender's mortgage insurance, as this is at 80%, finally you need to have sufficient funds for your extra costs. Solicitors, conveyancing, settlement agent, they're all the same name for the same thing. You need to have someone handle the legalities of your purchase. You need to have sufficient funds for building and pest, and also enough to cover things like bank checks on settlements, council rates adjustments, all these little things that go with buying a property. In general, I allow around $2,500 for all of these costs. So if we just summarise that example, if you're buying a property for $500,000 in New South Wales, you need $100,000, which is your 20% deposit. Stamp duty is $18,296, and your miscellaneous costs are $2,500, meaning you need in total $120,796. Excuse the typo there; it says 10%. That should say 20%. The process to get approved is roughly as follows. Obviously very summarised there, there's heaps to be done. But basically your key next step when you are starting to look for property is to get a fully verified pre-approval. When I say fully verified, I mean an approval that is signed off on by the bank. That is, you've given payslips, ID, the bank has reviewed that information and has given you a letter confirming you are pre-approved. To give you an idea, some lenders will not do a fully verified pre-approval. Well, they will, but you have to actually request that they verify the approval. So if you've got an approval within half an hour or a day, I would suggest it's most likely not a fully verified approval. And you can tell because the letter of approval will have conditions, and one of the conditions will be subject to the bank checking your application meets their policy. If your approval letter has that on that letter, it's not fully verified. They haven't checked anything. The issue with that is obvious. If you, what happens is you get pre-approval, and we see this quite often. You think you're all good. You go and find a place to buy. You've found your dream home. You then find out a week later that the bank has declined your loan because of your visa or some other issue. Once you've got fully verified pre-approval, that normally lasts for 3 to 6 months. You're then out there to find a property to buy, and we would give you guidance on what terms to put in the contract of sale, any finance clauses, any requirements for FIRB approval, and so on. So you make your offer, you get your offer accepted, we then get the home loan approved, and then somewhere between 30 to 60 days later, you get the keys and you get to move into your property. So just some misconceptions busted. We're almost home. Misconceptions busted. Are the interest rates or fees higher if you're a temporary or non-resident? Definitely not. Interest rates are standard, very competitive. It's more that there's policy differences. So the banks will vary widely on what they will lend to you based on your particular visa. For example, one bank might lend to you if you're on a 457 visa, but they won't lend to you if you're on a bridging visa or a 461 visa or a 422 visa. You know, they have different policies around what sort of visas they'll lend against, but certainly interest rates, fees and charges are not higher because of your temporary or non-resident status. If you've been told you must be a citizen or a permanent resident before you can be approved, this is incorrect. You can be approved. Certainly, the vast majority of banks do not like lending to those without permanent residency or citizenship, but there are a number that love it and will very happily lend to you, and we have some exclusive arrangements with many of those banks. If you've been told you need to be in Australia for a minimum period of time before your home loan can be approved, this is also incorrect. You can be approved sometimes even before you arrive in Australia. So there's no minimum time limit. Naturally, bank policy will vary on this. If you want to go to a lender if you're on a student visa and you want to borrow money, you may be required to be here for a year. If you're on a bridging visa, you've already been here for a year anyway. But there is no real minimum time frame for you to be in Australia. So just looking at your next steps, it sort of depends where you're up to in the process. If you're just researching for now, go jump online and download a free copy of our report, and you can also purchase a copy of our book online there as well, and there's a link there, maphomeloans.com.au/free-report. If you are looking to buy or make an offer in the next 3 to 6 months, then I recommend you book in with us now for a strategy session. This is no obligation, and we'll go through your options and whether you can be approved or not. And there's a link there, inquire now, to book in that time. If you've already found a home or have already made an offer, you need to really get in touch with us ASAP, as there is a number of things we need to get done to get you approved. I mentioned before we've published a book. I wrote this book, Buying Property in Australia, a guide for non-residents. You can buy this book on our website. Just look out for that graphic you see there on screen now, or you can purchase a Kindle version, or even purchase a hard copy version if you prefer from Amazon.com as well. The book is very detailed, however it is written in plain English, and the feedback has very much been easy to read, and within an hour and a half you have a very good understanding of the process here in Australia and financing requirements when buying a property. Just quickly on what some clients have said about us. This one here is for Daniel Rosa. He was living in Singapore as an Australian expat, and we managed to arrange him up to 90% for his purchase. Chris and Ruth here from Cairns, they were from the UK. They were here on a migrant visa, subclass 820. We arranged finance for them to buy their block of land and also now building their new home. So they're halfway through construction at the moment, and they'll be moving in very shortly. And finally, we've got here Aziz and his wife, and they purchased a property whilst on a 461 visa, and we managed to arrange finance for them with only a 10% deposit. So thanks for listening, and if you require any help or want to discuss things further, please jump online to maphomeloans.com.au and put in an inquiry, or give us a call on 1300 397 287. Thanks for listening. Look forward to working with you soon. Bye for now.